What's going on, guys? This is Aaron with Departures Capital. We're here with the CEO of CloudMD, Essam Hamza. How are you doing today, Essam?
I'm great, thanks, Aaron.
Yes, excited to have you back on. So for our viewers that may be new to CloudMD, Essam, can you give us a quick overview of the business and what you're building?
Yeah, sure. So CloudMD really is looking to transform the way healthcare is delivered. We're a health tech company started by doctors and practitioners with the understanding of how broken the system is, how broken the healthcare system is. And everybody can attest to how frustrated they were, navigating through that healthcare system over the years. And so what we said is we have to kind of totally revolutionize the way healthcare is delivered from what used to be very kind of doctor-centric, clinic-centric model where everything revolves around that clinic and you have to take a day off of work and call in and wait in the waiting room for an hour and a half and people are coughing around you and everything to get, to 5-minute appointment and get a prescription and then repeat the whole thing again somewhere else, to a patient-centric approach where the patient's in the middle and everybody else circles around them, connecting through technology to them as a team and providing better outcomes because of it. And so when we started, we said we're going to have to target certain companies for acquisition so that we can achieve this. We can go and build this full ecosystem of healthcare delivery without needing a patient to self-triage or think about who should I see next or who do I need to talk to or do I have to take a day off of work or drag the kids out of school. And so that's what we did over the last couple of years. We've grown very quickly and acquired quite a few companies and integrated them. We own all our own technology that we'll talk about. But the key thing is that the underlying message is that we built something that's an ecosystem for the patients so that they can come in and get better without having to worry about people not talking to each other and who should I see next and so on.
Wonderful. So CloudMD has made a significant number of acquisitions, like you said, in the last year. Can you explain the M&A strategy and roadmap, and where do you see the most amount of growth moving forward?
Yeah, so people see our news flow and they say, wow, you've done quite a few things and how does it tie into each other? Really, these are all strategic acquisitions. We actually went out and pointed at these companies that weren't for sale. A lot of them weren't even for sale, and talked to them about our strategy, our vision. They shared the same kind of vision in terms of where healthcare needs to go. And they joined us and are aligned with us with shares in the company as well. And helping us grow together. And so that's what we did, is we targeted a few things. Number one thing we said was, we have to own our own technology. And so all our technology is owned by the CloudMD, and we've been able to kind of integrate it together. We own our own electronic medical records, company that our practitioners and other practitioners are using across North America. We own our own mental health solutions and apps that patients can use right across North America so that they can, enter their symptoms and then see a therapist, right from the app as well. We own all our technologies that way. So that's number one. Number two thing we said was we have to create that ecosystem. In our healthcare, we tend to break up a patient into pieces. You're injured, you go over here into this bucket. You have a short-term stressor, you go into this bucket. You have a long-term mental health issue. And that's not how it works. We know that all these things tend to be tied in together. When you get injured, part of it's physical, a lot of it's mental, and it shifts over time, depending on how bad it is. You may lose your job, which becomes even more of a mental stress, and so on, becomes depression, and so on. And so we treat them as a whole person with this very holistic care. And so we acquired enough companies to create that ecosystem, a full ecosystem, to treat you as a whole person, mental health, physical health, short-term, long-term, whether you're an employee or you're at home taking care of the kids, it doesn't matter. The whole point is we're going to help you navigate right through your healthcare journey, right to better outcomes. And that's what those companies that we targeted over the last little while.
Wonderful. And you just closed another successful bought deal financing. So congratulations on that. How much cash is in the bank? Maybe talk through some of the numbers for us.
Sure. Yeah, we've grown incredibly big, quite large now. We have a good presence right across North America and growing. We have about 100 million in the bank right now, and our current run rate is about 85 million, actually north of 85 million. That's the base run rate even. That's without any organic growth that we've already seen, and we'll talk about that in a second here. So post acquisitions that we've announced and haven't closed yet, there's about 4 that we're still closing in the next few days here. We'll have, like I said, north of 85 million base run rate and about 60 million, over 60 million in the bank still on top of that. So we're really good position to continue growing. It's a very strong pipeline of acquisitions still that we're looking at, but also very strong organic growth that we're seeing. Amazing organic growth. We just announced just last week, I think, about our enterprise solutions that even the companies we just closed, as of January, they already have $5 million worth of new contracts in the enterprise division, right? And so we're seeing that right across our different divisions and our different companies that we've been able to integrate, not only cost efficiencies and savings, but incredible organic growth as well, which is really exciting here for us.
So there seems to be many new companies entering the sector going public. What are CloudMD's key differentiators from the competition?
Yeah, you're right. I mean, it's been a hot sector lately, right? And the thing about it is that we've been pounding the table for years and years and years, even before it became hot. Before the pandemic, we've been talking about the future of healthcare. And we entered this with the vision of what we built, which is that ecosystem. And so we have about a 3-year head start just on that aspect of it, of creating that full ecosystem. There's a lot of companies out right now that are still focusing on the slivers of healthcare delivery, meaning that they're just an online pharmacy, or they're just a EMR provider, electronic medical records provider, or they're just doing virtual telemedicine, episodic care or something. And we're all saying the same thing. It's like all you're doing is creating the fractured system that was before on the ground to a fractured system in the cloud. It's still not a good system. The future of healthcare is a fully integrated, tech-enabled healthcare delivery system, ecosystem, where a patient comes into the ecosystem and is taken care of. And that's all the patient wants to know, is that they're going to be taken care of. Someone's going to help them and navigate them to better outcomes. Not that, who do I have to see next? Which app do I have to download? That's not really what we're talking about. And so we are different in that we are practitioners. We have well over 100 or 120 years of medical experience on our team. We understand the space. We understand the players, from the patient to the providers to the payers, to the practitioner. Everybody basically. We understand what's important for them, and we bring them into the process. We try to empower them and engage them instead of trying to put them aside or ignore them. And so that's really, really important here. And we're building that full ecosystem, and we've been very, very successful so far.
Sounds great. So lastly, and I'm sure this is pretty exciting, so plans for uplisting to this TSX, how are they coming along?
So the great thing about it is that we've grown very quickly. I mean, we've grown from a very small company, obviously a year or 2 years ago, to now, close to 400 to 500 million market cap, 100 million in the bank and 85 million run rate. We're in a different league right now. This is a very transformational year for us. We're becoming profitable, and we have incredibly rapidly growing revenue that we're seeing, base as well as organic. We are going to be in a different league basically over the next little while, and the uplisting to the TSX and eventually, maybe the NASDAQ and so on is in our pipeline for 2021 and 2022. And so that is something we're working on right now. The reason, the important thing about that is you want to do it properly. We have a very good following right now institutionally. I think we have 5 analysts, and we should have some more coming across North America. And we just want to continue growing to a point where our name, our brand is kind of synonymous with good healthcare delivery and a good company that's growing both inorganically and organically and so on. So the plan is there for the uplisting to TSX as well as, like I said, NASDAQ.
Great. Well, thank you so much, Essam, for those updates. And I look forward to, providing audience with more updates as everything progresses.
No, thank you, Aaron.
All right, guys, that wraps up the video. Thank you so much for watching. I just wanted to say, if you do support me the channel and all these videos, then kindly smash that like button along with hitting the subscribe button and the bell for notifications for future videos. I did also want to say, check the disclaimer down below. This video was sponsored by the company that we are talking about today. So check the disclaimer, full disclosure, and we're out of here. Always remember, guys, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you make your own personal investment decisions for yourself. This video is not financial advice. We'll see you guys in our next video.